All right, stop loss placements. Let's go over them real quick, and we'll also go over take profits. So when it comes to doing a stop loss here, a general rule of thumb is you should put a stop loss where your trade idea will be invalidated, and that is kind of the idea we're going to be going over here. When it comes to um, taking trades off fair value gaps, the general idea is you want to place your stop loss at least above the first candle's high that started the formation of the order block. So candle one out of the three candle formation. And preferably, if you want like your safer stop, it should be at the swing high, or at a swing high of a fair value gap like this. Now, let's say that you have a breakaway gap here. So, but let's say you have two fair value gaps here. If you're looking to take a trade on the bottom fair value gap here, you have to always be able to encompass this fair value gap here, right? Because price can trade up into it, right? So understand where your entry is going to be, or sorry, this one. Understand where your entry is going to be and make sure that you're able to place a stop loss that if you believe price is coming up to this level, this will completely invalidate your trade, especially even if it's just a wick. So let's say you guys want a really tight stop loss because you want a really good RR, but you guys decide to put your stop loss here, right? Just because price wicks up, takes you out here, coming into this SIBI here, does not mean your trade idea is invalidated. Your stop loss should be at a place where your stop loss is invalidated. So real quick, going over when taking trades over on fair value gaps, if you have a breakaway gap or if you're taking a lower fair value gap out of two, all you have to be able to encompass the second fair value gap. If you're anticipating a breakaway gap, right, you can put your stop loss at the high of the fair value gap candle, which would be candle two. And if you're anticipating that, price is not going to trade up to here, you can do that as well. As long as you guys can find a reasonable place to put it where your stop loss, wherever price is going to come up into, and you're okay with losing that trade, if you think if price even wicks up into there, it's going to make it so that you don't have trust in your trade anymore, that's where you'll put your stop. General rule of thumb, when it comes to fair value gaps, if there's only one, you have to place it at least above the first candle's high here, right? The first candle in the first candle formation, or the swing high preferably. Now we'll go over order blocks and propulsion blocks real quick. So, let me draw an order. Actually, I'll do this down here. We'll go over order blocks and propulsion blocks real quick. So general rule of thumb for order block stop loss placements is if you're taking an order block here, right? Look for the swing low of an order block. If there is no swing low part of the order block, then it's not a valid stop in terms of what I'm about to explain here. If you're taking a trade off an order block here, the general rule of thumb is at the swing low of the order block or at the low of the order block, that's where your stop loss should be, right? Again and again, if you guys end up having a propulsion block here, there's one of two things you guys can do here. And I suggest just putting it at the low too. Since this is another swing low here, if you guys choose to take it at the propulsion block, you can put it down here. However, when it comes to propulsion blocks, right, if it's a true propulsion block, price should not trade below the mean threshold of it, meaning mark it out with the bodies always, that your stop loss can be just a little bit below the mean threshold. However, I don't suggest this, and I suggest putting it at the swing low here. Let's say you're considering this your order block here, and the second it was created here. Now, the problem with this is that although we can consider this an order block because it is a down close candle here, right? There's no swing low here. So entering off of this, you cannot reasonably put your stop underneath of this. However, once you make a swing low with the order block here and then price returns into it, like we do see here, right? You can reasonably put your stop loss below the swing low point, right? And this comes the same thing when it comes to trailing your stop loss, right? Let's say you took an entry here at this order block, right? Your stop was originally here, right? Once we make this next order block with a swing low, you can move your stop here, right? Then what happens? We make another order block or another propulsion block here, right? I'm just going to use this for better terms, right? So what can you do? You can drag your stop loss again to the low of the order block, as this low should be protected right here, right? Same thing. Again, swing low point that was made after the order block creation. This is a protected low. You can move your stop there. Another order block was created here, right? With the swing low point. This is another stop loss placement here, right? There was no swing low placement on this order block here, so your stop loss will have to stay here. No swing low point on this order block here, so your stop has to stay here, right? Once we come back, make a new order block here. In terms of this high, we have your swing low point. You can move your stop loss to here, right? Then again, new order block has formed here with the new swing low, right? You can move your stop here. This can technically be considered an order block too. If you want to move your stop loss here, you can. And again, one more time, right? We make this order block right here, right? With a swing low. What happens, right? This low is now a protected low. So again, you can drag your stop loss up to here. We have another order block again, one more time here, right? With a swing low. What can you do here? You can drag your stop again to this swing low. Now you see up in this leg here, we have no more swing lows when it comes to order blocks here. And now we have this swing low from this order block which was taken, right? This now becomes your breaker block and you'll be stopped out here. But you see how once you get stopped out here, price starts to instantly reverse in your direction. So that's how we do stop losses and trailing stop loss when it comes to doing order blocks. Do we have any questions about that so far? Cool. Feel free to do a message if you guys have any questions along the way. So let's say what happens here when you have these giant inefficiencies here when it comes to stop loss placements, right? If you're not waiting for discount, you have to make sure that you're encompassing at least, right? You can reasonably anticipate, depending on how price action is looking, a maximum, at least from my testing, a maximum of 2 breakaway gaps, right? So you have to allow price to come into at least have 2 breakaway gaps. So if you are entering here, you have to allow price to at least come down into this fair value gap low. So what can you do? You can put your stop loss here if you're entering here. So that's what I would do if I was entering here. I personally wouldn't, but you can do that if you want. And again, same thing, let's say right here, right? When it comes to something like this, you can reasonably anticipate 1 breakaway gap from this 3 leg. So if you see 4 fair value gaps get created here, 1, 2, 3, 4, you can anticipate 2. And I would do a maximum of 2 no matter how high the number of fair value gaps you can do comes in, right? A maximum of 2. Here, when you have 3, you can reasonably anticipate that the bottom one will be a breakaway gap. So what can you do here, right? Stop below this low here if price wants to come below here and then shoot up. Okay, do we have any questions about that? Cool. Now we'll move on to take profits. So there's a few things you guys can do when it comes to take profits, and we'll kind of come to here and we'll kind of look at it and we'll kind of do like a little we could do a little demo trade on our way down here and kind of make that work, right? So yeah. So let's say you guys, let me see if I can find like a decent setup. Some kind of setup that forms. Okay, let's say you guys took a trade like this. Only once? No, fair value gaps can be respected multiple times. Just note that technically when you're looking at a fair value gap, once price has traded into it here, only this part of the fair value gap is left inefficient. So this is going to be pretty much the best spot to take your next trade as kind of like a turtle soup. However, that's not saying that if just because price traded up here, that this part of the fair value gap still can't bring price down. It just really means that for your best entry, this is the true inefficient part of price here. So let's say you guys took a short out of this fair value gap here, right? Let's start to manage our position here, right? So what can we do here, right? We can reasonably expect our first stop loss, right, to be above candle 1 of the formation of this order block. I mean, of this fair value gap, right? So this is where you can anticipate price to go. Let's say you guys are looking for, you guys don't really have a liquidity target. This is not enough of a RR for you. If you guys are not specifically taking your trades off RR, like sometimes if I don't really know, or if I'm kind of fading a trend, or if I'm not that confident, I'll just go strictly for a 2R, right? I'll go for a 2RR, so something like this, right? Boom, just a strict 1 to 2, and I'll take it off. It doesn't matter where the liquidity is, I'll strictly just take it off here, right? At a strict 1 to 2, and I'll be done with it, right? But let's say you guys have an actual target. Let's say your target is this low, for example, right? What I would do is I would continue to do the trailing thing when it comes to trailing your stop losses above the order block, depending on how confident you are, or if you just want to go break even and let it ride out. What I would do also is take profit points at discount or premium arrays. So what that means is if you were short from here, right, you would look to take a partial or take profit at this inefficiency here, right? So let's create our range here from top to bottom. We can do our quarters, right? Anything below here is in a discount. Look for your discount BISIs, discount inefficiencies here. This is your first one. You can take a partial right here. Boom, right? And you can see price kind of moved up there, coming back down, edging this low, right? So this is an easy take profit point. Or again, if you're trading in bad conditions like we were here, an easy 1 to 2 RR, there's nothing wrong with that, right? You can take it. You could take your 1 to 2 right here, right? What you can also do is, let's say you took a hypothetical long, or let's say you took another hypothetical short here, right? And you were targeting your 2R, right? What you can do is that once price comes to your 2R placement, right, you can drag your stop loss here, and if price is going to continue to run, you'll get that extra RR, maybe down to this inefficiency here, or if price stops you out, you'll be stopped out, yeah? But generally, we can also look to target as take profits points of liquidity, like clean points of liquidity, right? Let's look at, like, for example here, right? These highs were very clean, right? Relative equal highs here. What can you reasonably do, right? Again, remember, you have to encompass, let's say we take a trade off of this fair value gap, you have to encompass this lower fair value gap here, right? So once you encompass this lower fair value gap here, you can target this as liquidity for a take profit. But let's say this is not a 1 to 2 R. This is not a trade I would take because it's not a 1 to 2 R. So there's a couple things you can do in this situation, right? Since I'm not going to be comfortable moving my stop loss anywhere past here, right? You can look for a lower entry, maybe get in on the CE of this fair value gap, maybe get in on the lower one. Or you can just, again, target a strict 2 risk to reward. It's a little bit above that high, but it's not too big of a deal, yeah? You'll get stopped out break even, but that's something you can do. Right? Usually, if it's above a liquidity point like here, I would lower my entry to at least get myself a 2 risk to reward ratio when it comes to this. Does that make sense? Do we have any questions about stop losses or take profits now, or even partials? Cool. Again, very quick recap. When it comes to stop losses, right? What about partials? Um, it's definitely situational. So I usually put at least a partial at a premium, depending on how strong, or if it's a low resistance liquidity run that I'm looking at, like something like this, right? My partials will always be at highs. When I'm able to see displacement like this, I have my partial at highs, right? It doesn't matter whether it's 2R, right? I would just like to secure some profits, but I would generally put it here. Like, even if it's not a 2R, right? I would just take out less of my position to just cover, just to get a little bit of profits, right? Yeah, it's situational depending on the draw and liquidity. However, when I'm looking at a high resistance liquidity run, for example, like this example here, where price is doing heavy retrace, is having a really hard time getting down the displacements here, I like to take it at these premium PD arrays, right? Or discounted PD arrays if you're going up, right? Boom, right? Very easy partial spot right here, right? Stuff like that. Now, something else you guys can do if you guys are targeting higher, right? And you don't want to risk giving away profits and you're, let's say back at this example when we were trailing on stop losses, right? Let's say you were wanting to go higher. What you can do here is after we take this high here, right? You guys can just drag your stop loss right up to this high here, right? And you either get stopped out instantly or price will continue to rip up and you'll get some extra profits. Something else you guys can do if you're really confident about price is that you can do a 25% sweep level right here, right? So let's say you got in like right here, right? If you guys do not get the desired RR you want at here, right? Again, the 25% sweep level is pretty much the maximum price can go before it's going to come back down. Okay, quick little recap and then we'll get over it and I'll do another example just so we can whatever, right? So when it comes to stop loss placements, again, when it comes to trailing or taking it off order blocks or fair value gaps, right? Always look to, let's say you take it off of this this fair value gap here, always put it under candle 1's low here, the first candle of the fair value gap. If possible, put it at the swing low if it matches up with your risk parameters and your take profit parameters, right? When it comes to order blocks, you want to take it off the swing low that's created after the order block here. So in terms of this one right here, right? Boom, this is the swing low of your order block, right? Now again, when another order block forms, you look for the swing low of the order block again, right? Boom, here's the order block, here's the swing low. This is a protected low. If we're in a true buy model, this low should stay intact, right? And here's a good example here why you always have to cover the candle here, right? Two fair value gaps here, right? You have your entry here at this fair value gap. You have to cover, if you're taking the higher one, you have to cover the lower fair value gap by putting it at fair value gap at this candle's fair value gap 1 right here, right? Because let's say you took this one and you just wanted to cover the fair value gap here, right? You would have been stopped out, right? This is not a stop out point. Just because price traded below here doesn't mean you're stopped out, right? So you have to put it at the swing low point here, right? And if you want to use it in conjunction with this order block, as if you were taking a trade off the order block, you put it at the swing low. Same thing here, right? Order block here, swing low here, right? These are equal lows here, right? This is not a swing point, so you will not put your stop here. You see price comes down and takes it, right? So this is when you know this is not an order block, you can put your stop loss below. Again, here, right, we have an order block with a swing low. This is a protected low. Order block with a swing low. This is a protected low. No swing low here off this order block. This is not a protected low. No swing low off this order block. Triple right here, right? Not a protected order block, right? Now, what can we look for here? New order block here, right? We can't consider this an order block here, all right? We cannot consider this an order block, right? This right here is your next order block here. Swing low and you're protected. Now here, unfortunately, this was your swing low point. Price did come down, trade ensued, but you would have been stopped out, but that's not a big deal. And this is kind of where you'll have to judge, right? But that's not a big deal. Sometimes you'll get stopped out like that, and that's how you kind of manage your stop loss appropriately and your placement of your stop losses. Again, when it comes to take profit points, I guess you want to look for your premium points of liquidity. So let's say you want to target something, right? Never take partials. And I guess I'll explain this part of the partials point that I forgot to do. Never take partials anything. If you're shorting, like here, right? Never take partials anywhere in premium. Never, right? You can go break even after we take like a certain low, for example, or if we reach this inefficiency, you can go break even. That's fine. But your partials always have to be, because price, if it's truly selling off, will always reach into discounted liquidity or discounted PD arrays, right? So again, this could be a partial or a full take profit place, right? At a discounted liquidity pool and at a discounted fair value gap. Does that make sense? And the same thing will go vice versa when it comes to longing, right? Let's say this is your long grade here, right? No partial should be taken no matter where you enter, right? Even if you enter down here, right, at this low risk buy. No partials are going to be taken until you come up into premium here. Does that make sense?
All right, cool.